The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. And folks, you just heard a fabulous show with Tom and Daryl talking about the NADAX platform, how you can use it. There's a fantastic competition, prizes, cash prizes. $300 to $1,000 to $3,000. Was it $100 to $3,000 or was it $300? Anyway, I think it was $100 to $3,000 given away, money given away every week. All I need to say is it is a fantastic way not just to learn, but to have fun, to be able to organize in your mind how you can best use risk-reward. There are techniques that are available. I'm going to show you something right now, a fabulous technique that you might want to even include in whatever it is. So go to the front page of TFN. You go until this coming Thursday to sign up, and that will allow you to start on Monday for a week to be in the competition. And it is called, let me just get my notes here. I want to give it the exact title because I had it right here in front of me. Well, now I'm going to not be able to find it. No, it's right here. TFNN will be hosting our first virtual trading competition. We'll be giving away $10,000 in cash prizes. Pay to have fun. I can't believe this. So to enter, sign up by Thursday, September the 5th by noon. Trading competition follows at Monday, September the 9th, 9 a.m. Will end Friday at 5 p.m., September the 13th. And all trading for this competition will take place on the NADAX exchange. For more information, go to the front page of TFNN. Just check it out. I mean, if ever there was nothing to lose, this is nothing to lose. Everything to gain. So let's go to the numbers. In a bear market, what will happen is that every bit of news is treated as bad news. In a bull market, do you remember how many Tuesdays we had? A record number of Tuesdays, 30-something Tuesdays, I think it was, that were up. Consecutive Tuesdays. That happens in bull markets. Well, it doesn't even happen in bull markets. It's rare. But it can only happen in a bull market. Here's the other thing. The last hour of trading, that's where fund managers make big decisions. When you start to see, unlike a bull market where you start to see every buying opportunity taken, and in the last hour, when you think, okay, they've just got to take a break now because, I mean, the market's been up for 3 days in a row and every pullback, and the close is at the highs, you start to see the exact opposite in a bear market. Now, there's no question in my work, based on the Chapman Wave methodology, that you've gone down to a sell mode. You had already reached a sell mode by this past Monday in the Dow. The S&P confirmed it on Monday. It's the weekly charts that I'm waiting to see how we close today, because there's almost just a huge possibility that I will then have triggered in my work sell modes. We've got that already in the Dow, but we're waiting for the S&P to confirm. It's going to take a little while for anything but a sell signal to be formed in the Qs, the NASDAQ QQQ Trust series. So that's it. I just wanted to show you something real quickly here. Excuse me, he's right in the middle. The last trading day of the week, last trading day of the month, August the 30th. How the market closes today on the weekly is important. It's even more important in the monthly chart, and as we progress, I'm going to go through everything. So, number one, let me just give you the numbers. The Dow's down 37 at 14,803. The S&P is down 4.5 at 1633. The Comp Index is down 23 at 3596. Apple is down 3.40 at 88.30. I don't want to change my settings right now because, well, let's just do this. It's the last day of the week. Let's just do it. So here's the E-mini. E-mini made a peak D in the Chapman Wave using the Chapman Wave methodology. Gone to a trough D, failing. You see that black line there if you're looking at Tiger TV? And this is really important, folks. We have so many tools here It is just uncanny how many tools we have here at TFNN. But in my work, I have a Sears and Roebuck toolbox. I might be using the 9-period moving average for a certain thing. I might be using the 200-period exponential moving average. I might be using the arch formation, the left side, right side price time match. I might be using symmetry. I might be using the double top drop bucket pattern. I might be using the H pattern, that the lowercase h that has a left side test. You need as many tools in your toolbox as you can have. Why? Because in using those particular tools, it's as if you're going from, let me think of it this way. If you're going from Boston to New York and you've got your GPS set, do you need exit 1 and exit 2 and exit 3 when you're ready at exit 6 and you're on your way and everything's going? No. You're watching your fuel tank, you're watching your time, you're watching all other things. You're watching when the next exit comes, you're watching to see the signs at 84, am I going to go the right way? What are you going to do? Well, that's the same thing here. As you're moving along in each time sequence, as I'm going to explain in a few moments what happens with my monthly charts, so you're saying to yourself, okay, I don't need the daily chart if I'm using the extended monthly chart, surely. Well, sometimes the daily chart is the rudder. The daily chart is the one that's going to change course. You cannot change course with the engine. You cannot change course just with a sail. Well, you can, but it's very slow. You cannot change course by putting your hand in the water and hanging it out over the side, saying, I'm going to be able to turn, unless you're in a tiny little kayak or something like that. For the big trends, you want to know that your rudder is set at a certain point. Well, the rudder becomes the daily chart. The momentum is the weekly chart. And the major tide is the monthly chart. That's why I used to refer back in 1998, 99, 2000. I used to refer to the market as the super tanker. And then what's her name? Abby Joseph Cohen hijacked because we had the same conference at one point, somehow hijacked my terminology and it got used. But yeah, think of the market as a super tanker. You cannot change American economy or change the American trends in a day. It takes a long time. If you are a media watcher like I am, that means I don't watch the media, I watch what's said. You know that trends, I know this from when I was a child. I used to look at trends, whether it was automobile trends or whatever it was. And I always knew that in the little town that I lived in as a teenager, a little mining town near Johannesburg, as a pre-teenager up until 12 years old, I lived in Cape Town, South Africa, one of the most beautiful cities in the world, in a suburb, Sea Point, right on the coast. Well, I knew from my little mining town how long it took for any trend that I'd seen, usually from American media and newspapers and everything, any trend to finally reach my little town. And by the time it reached there, whatever it was, whether it was stovepipes or the ducktail in those days, it was already over in the major cities. So I'm a trend watcher. Now, the most important, why I'm doing this is because I think it's really important. I'm showing right here smaller trends. There's the daily on the left side of the chart with the Dow. With the E-minis at 1632, minus 4.25. Cannot break the 9-period moving average. This is the 9-period moving average on the daily chart. But wait a minute. The one on the weekly chart couldn't even hold this below that. On the 120-minute chart, that's 2 hours. That's a half. We're talking about, you got 24 hours in a day. This is 2 hours, so 12 hours, 12-hour bars you've got. This is pathetic action, absolutely pathetic action, because the day is young. But let's face it, at this particular point, not to be making a leg C up in the Chapman wave above 1645. In fact, to be testing the wick of the 29th at 10 o'clock at this time on the 29th, down in the 1620s, was at 1632, just above it. It was earlier at 1629.50. That is not good action. So let me just show you. time frames are very important. You're on your way to New York. When you get to New Rochelle, you don't have to, if you've got enough gas, you're not watching the gas anymore. You don't care about the gas. If you're in New Rochelle, you're not thinking of exit 12 or 13, whatever it is. You're looking for exit 19, whatever the higher number is, or whatever the new state number is. And as you're getting closer and closer, so your GPS becomes more and more important, because now you're going to go into the side roads. You don't want to make a mistake. So I'm trying to put that into the perspective of tools, and I'm going to show you something here. I'm going to finish running the numbers. Gold is down. Friday, usually, most often it's down sharply, but it's only down 12 now. In fact, we try to pick up a gold stock this morning, which we did, a stock we had before. We tried to get back into it. We've just got back into it. I think something's happening here in gold that is very important. Let me go through some other things, and I'll try to get to all the different aspects. This is Technical Friday, so I want to look at it in a more technical way. We've got a whole bunch of people. Wow, the den's starting to fill up with a whole bunch of people have come back just to see how everything's doing. Hopefully they're going to stay, and brand new people right here in the Tiger Den, so they can see my charts. I wanted to show you that arch formation, how important it is in the E-minis. I wanted to show you how the arch formation can be completed and then fail, and what happens when it fails, the sequence that happens. You make another little arch here in the 120-minute chart. But first of all, I'd shown that there was, in the Dow Diamond 120-minute chart, there was a V-shaped pattern. Let me just go to that since I'm talking about it, if I can find it. Right there. There was a declining wedge, but within that there was a thing called the Chapman Wave Inside Wedge Target Line. That's in my CD introducing the Chapman Wave methodology. I wanted to show that for two reasons. It showed that the key support of 148.25 is going to be really important. When 147.50 goes, I suspect it's a matter of when, not if. I don't know if it's sooner or later. We are looking at the 146 to 145 level as major support. This looks a little bit like a large head and shoulder pattern, but actually it's really the Chapman Wave arch formation, a left side, right side price time match that we're looking at. Now let's go back to what I was looking at here, and then I'm going to talk about some technical aspects. The gold is trading down 11 at 14.01. Silver's down 49 cents at 23.60. Platinum is up 5 at 15.24. And high-grade copper is back at 3.2. I'm watching this real closely, because if copper starts to fail, there is no rebound coming, economic rebound. That's going to be a big factor. Crude oil is down 78 cents at 108. Hit 112 just recently. And bonds are at 133.03. And the dollar is up 22 cents. Now, as we're about to go to a break, let me just show you something here that's really important in my world. This chart that I'm showing here and this chart that I'm showing here. Same thing. This is the gold. It's a little bit behind, but it is the gold 10-minute chart. Look, the Chapman Wave always looks for peak Ds, and that's where you've got to be careful. Look how many peak Ds in this 10-minute chart. Hits the 200-period moving average, hits the 200-period moving average again, peak D, hits it again.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors.
TFNN has just announced our first ever virtual trading competition, and we're giving away $10,000 in cash prizes, and it's free to enter. Sign up by Thursday, September 5th at noon Eastern, and the trading competition will take place the following week, Monday, September 9th, with first place winning $3,000. Don't delay, as you won't be able to register once the competition begins. Sign up now and reserve your spot in TFNN's $10,000 virtual trading competition. To sign up and for all the details, log on to TFNN.com.
Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Basil Chapman, Tiger Technicians Hour. I'm here Monday through Friday, 877-927-6648. We do have callers online, but I do want to just finish this particular thought at this particular time, because we've got new people in the den. We've got new people listening. I know that. Dow's down 32, S&P's down 4 now. And I have the opening call. That's my service, my daily, very comprehensive daily service based on the Chap Wave methodologies. Goes out every single day, starting about 6:15, 6:30 in the morning. Final chart, that's the Trader's Corner, goes out at about 8:35 every day. And most importantly is that I describe and I explain and I show the charts, that the patterns that we're looking at and why we're trading them every single day. And people learn the methodology as I'm moving along. It's like a lesson every single day. Now, what I wanted to show you, talking about lessons, I can do the naked chart. I don't need anything else. I just look at chart patterns. And I'm looking for at least a peak D. Look how many peak Ds there are on the 10-minute gold chart. It went to peak D from 2 p.m.-ish roundabout on the 29th of August. Went all the way to the peak D. That is at 8:30 that day, 8:30 in the morning, so in the evening to the night. In the evening to the day, then it pulled back, started a brand new buy mode on the 29th at 10:30 in the morning. Went all the way to another peak D in the 10-minute chart at 13:30, that's 1:30 in the afternoon, pulls back, breaks to test the low there. That also is the pattern that I always talk about. It's called the arch formation, or the dreaded H. Well, we now call it the H pattern, because I don't want to make things confusing. It's called the H pattern, lowercase h, and it retests. The retest says 1402.10 was the low on the left side. And then what I usually do is you'll see me do this, I grab a little rectangle, or it could be a straight line, and I do a left side, right side price time match, and I look to see, is there going to be a chance that it comes in at or close to or before that particular match of the arch formation, and that's what I'm looking for a test. Well, what does it do? It goes to 104.02.00. It makes a lower low. What's the rule in the Chapman wave if it makes a lower low? Yes, you can bounce, but you've got to go to each peak successively on the left to see if you can break above it. The rule is if you go under it and close above it, you will not take out. You probably will not take at the left side high that was made, in this case, the high of 1380, made the 29th at 130. And what happens? It goes to peak D and it fails. Where? At 1411.50. It comes down from peak D again to a trough. It goes to a trough D. And what does that trough D say? It says, aha, I've gone A, B, C, D. The rule that I just said is exactly the same, except this is where the technicals are so important in my work and why I put the technicals in. Why? Because it says that if it breaks on the second or third H pattern, this one is actually the second. There's another one, look, right there. This one broke below decisively. It says on the left side, if it breaks below, and one of the reasons why I wanted to grab a gold, we're already long from almost the bottom in the equivalent of the GLD gold spider. What I wanted to do is to add another gold stock. So that's what we've done. Grabbed it almost at the low this morning. I think it is in fact the low. Well, the day's young. Yeah, it's exactly the low. Now look at this. I've been drawing this, and the rule that I just gave says that because it closed, it went below the GLD and the 10-minute went below the left side low of 132.92.60. There could be another move to the upside, but it should not break peak D. Aha! This is where the technicals are so important. So here's the chart with everything on it. And what does it say? That 200-period moving average, that yellow line, which is so important in my work, which was where the peak Ds failed, went to the arch formation at the bottom for the same kind of, this was a cup formation, now it is an arch formation, the H pattern, and it says only if the technicals are very strong can there be a break to the upside and a test of the 200-period moving average work. Now, if you're going to be trading the Nadex, do you not want patterns like this as well, plus the deviations that you'll get from the platform itself that Daryl's worked on? Look at this. The MACD was climbing all the way. When it made the low there, the lower low than the left side, the MACD was saying, don't be fooled. This is going to go higher. The stochastic was going higher. What does it do? This is a brand new, because it made a lower low. This is called a brand new A, leg B, and there could even be higher highs to come over the period of the day. That 200-period moving average at 1404.20s is, in fact, a target. I thought I wanted to go through the technical Friday in the Chapman wave. Look how beautiful. This was in live. This was in action. I didn't have to have the candles and everything, but adding more tools, the correct tools, and looking at them helps. I'll be back with all our callers straight after this. Basil Chapman, gone through a little study. The Dow's down 40, the S&P's down 4.78. We are looking to see where some kind of a trading bottom comes in, and we are remaining short from the August the 3rd top in the S&P peak F. I'll talk about that as well when we get back.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is having an open house in the Tiger's Den for 2 weeks, and the best part is that everyone is invited and you just have to be a member at TFNN. The open house in the Tiger's Den has already begun and will last through our week-long virtual trading competition, which ends September 13th. Use this time to exchange trading ideas with other traders in the virtual chat room and discuss trading strategy while gaining high-definition access to all TFNN hosts' charts and screens during their live daily programs. If you're not already a member at TFNN, then the easiest way to become a member is by simply signing up for our $10,000 virtual trading competition, and the rest takes care of itself. In order to register for TFNN's virtual trading competition, you have to sign up by Thursday, September 5th at noon, and that's right around the corner. So don't wait and sign up now. For all the information and to fill out your entry, visit the front page of TFNN.com. TFNN's open house in the Tiger's Den for 2 weeks only, ending September 13th. Sign up today.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
All right, folks, we're going to go to our next callers, but this is what I showed my subscribers this morning. I hardly ever steer away from my major focus of stocks, etc. This is, you know how I made a huge deal when China spent so much money on the Olympic Games, and I said, absolutely, this is a top for China. They're going to go into a deep recession. Well, it's the same thing for Rio. Look at the solar city built atop the island of Cotontuba. Will be a welcome symbol to. It's just incredible. What a beautiful concept. I mean, it's great. Now look at this. Look at that. This is from the beach. I think this is Ipanema. Okay, there it is, right there. It is beautiful, but this is even more important. Look. I just showed that, didn't I? Yeah, look at that. Beautiful. So there's a walkway at the top. There's a restaurant. Look, there's a bungee jumping thing. There's a waterfall. It's using the ocean for the synergy of making energy from the ocean itself. The concept that's been used many places around the world. But this is, what a beautiful design set. It's just a pity that they're going to go into economic problems after that. That's my impression. That's what has happened. Oh, I made a mistake. That's what has happened to, whoa, stop there. That's happened to so many different countries straight after the games. Okay, now we've got our first caller online. We're going to go to Mike in Long Island. Thank you so much for waiting, Mike. I need to get through all that stuff, and now I'm ready. You'd like to look at?
Well, first of all, thanks for the analysis of Salesforce yesterday.
Yes.
I think we did a good job by avoiding doing anything on that. But I'm getting a bullish Gartley on Herbalife, yet using Chapman, the Chapman wave, I'm seeing a bunch of mixed signals here.
Absolutely.
So, what do you see short-term and long-term here?
Okay. As far as I'm concerned, I believe that the pumping up of Herbalife, HLF is the symbol, trading at 59.83, down 39 cents. I believe that it is a phenomenon that takes into account, and I use the word account very judiciously, a number of factors. And because you've got so many of the heavies going whole hog into this stock, not just to teach Ackerman a lesson, because that's the way they're looking at it. They're teaching him a lesson by being rather abrasive, and this is his hubris for coming out openly to say he's short the stock, heavily short the stock. But there is something there because it's been in the game the longest, and I believe that by being in the game the longest, that they've been able to game the process so that its bias is towards being a legitimate concern, even though when you hear about it, everything in your mind says pyramid scheme, pyramid scheme. They do have a product, and I think that that's what's really kept them going. Products, I should say. I've never tried it. I'm just saying from what I hear. That's number one. And number two is they've been able to work their way around all the technical details thus far. Now, I'm going to set that aside. I'm going to do the study that I've done before. This is a stock that doesn't mind going to a peak G in the Chapman wave, but that's not the issue. The issue is that the last high back in 2011 or 12, what was that, 11? No, April of 2012 at a high of 73. A round number high, a doji candle, and then it dropped a little bit from 73 to $24.24, and it's one of the few stocks that's made a Chapman wave Roman candle that never got filled. And that the object of this particular candle is to demonstrate that if the price goes halfway into the wick, there's a really good chance of not only testing the low, but breaking the low before a pretty good bounce can occur. That's number one. And the other is that if there is a close above the high of that candle, which is at 47.45, this is the monthly chart back in December of 2012, and that broke to a new recovery high, 52.84 was the high in May of this year, it can go higher. Now, I'm looking at it and I'm saying, wait, the stochastic's only at 58%, whereas before when it went to this level, it was way, way higher. It was up in the 90% area. That's number one. Number two is there's a move in this leg that stopped in the monthly chart because the monthly is about to close today, and there's absolutely no way on earth that this thing can break to the round number 68 high by 4 o'clock this afternoon. So leg B has stopped dead at another round number high. And that round number high corresponds to, and I don't do this arbitrarily, but once in a while there's an overlapping wave, an overlapping notational waveform that I have to take into consideration. And that says that the two parallel highs were a 2 cents difference back on the week of the 10th of May at 45.48, and the next high of 45.50, 2 cents higher, saw a reversal in the stochastic that says that 3 cents difference, because it should have been 1 cent low to officially be a peak B, I'm going to take into consideration to say that the round number high, with the stochastic still strong at 85%, but turning down, and the on-balance volume turning down, with the MACD still very good, and with the price right now touching at 59.86, for the week, it's already touched the low of 58.47, which in fact is the 9-period exponential moving average. I'm suspecting that we've got a deeper decline coming in. Why am I forgetting the name all the time? Herbalife. I should just read it. Herbalife, because I always call it HLF. Now, HLF in the daily chart has made a peak G in exactly the fast moving average formula and the stochastic breakdown that I always look at. Let me just put these vertical lines in. I'm going to do this real quickly, and then I'm going to give you my summation. Right there at peak F and then right there at peak G. The difference is that the price is now failing, and then this rally to the high of 66.36 on the 21st of August had absolutely no veracity whatsoever. So I would consider that Herbalife is a short. The 120-minute chart says it's just on the 200-period exponential moving average now, so it could have a little bit of a bounce. I'd have two positions. One is to short it as we speak now. Hopefully it's bouncing. I'd rather buy short it on a bounce. 60.77 is the between 59.89 and 60.77 is the first entry, knowing that on any rally on Tuesday or Wednesday, this thing should probably bounce. But that's just a tiny, small position starter, and I would add to that position that's between 61.90 and 62.35. I would add to it, and I would have a stop on part of my position, a little wider than I normally talk. 65.74 would be the stop, but the stop on the whole position itself, I would say 66.37. That would be about right. So that's about an 11 or 12% on a total small position shorting HLF. Small position meaning, let's just say one was going to short 200 shares or 100 shares. I would only take a tiny portion right now to immediately start the short. If it actually breaks below today's low, I'd add another small position to that. But a larger position than the small position will be added anywhere at that 9-period moving average of 62.19. I think this has made at least an intermediate term top, and I'm calling it in the Chapman wave an alternate peak D, and I could be wrong, because if it breaks above 68.00, it starts official leg D. I think that this is going to be pulling back. I think it's made at least short to intermediate term, and my downside target, first target would be, so 59.88 would be between 56.80 and 54.40, somewhere around there. Hope that helps you.
Yeah, Basil, on the monthly, where do you start the count? Can you just, I'm just confused.
The new count starts right here at the low of December of 2012, and this is brand new leg B, and it's a gray B because it's underneath the previous high. And if it makes a new recovery high, I have to consider that there's no other way that I can call it. That would be a brand new buy mode in Herbalife. It would be a fantastically bullish thing, but I'm going to go one step at a time.
Okay.
Hope that helped you.
Okay. Yep.
So thank you very much for calling. Have a great weekend. Now, Mike in Ormond Beach. Oh, Mike, I'm sorry. Maybe I took a little bit too long. Mike, I know you want to talk about the Dow. It's appropriate for me now to talk about the Dow. Please give a call back if you just dropped off for any other reason. And just once you're online, my engineer will just say, Mike's back, or just yell. I'm here in the middle of my conversation. I don't really care. Why? Because we're about to close. We've got another 4.25 hours before the week closes, the month closes. It's worth now talking about the longer term picture. We're looking at the Dow. The Dow has made a trough C with an arch formation. That trough C, we went short the Dow at about 15,570, I think it was. It went about 80 points higher. We're still short. I'm staying short. This is going to be one of our more intermediate term positions, I believe, rather than just a short-term trade. What I'm looking at here, so Mike, if you can call this, that's fine. I'm looking for a test. Let me just give you one step at a time. In my opening call, this is what I do every single day. So besides, I don't usually show charts like this. What I show you is charts like this. This is the Dow, the DOG, which is the 100% short. This is a position that we got at 28.34, and right now it is trading at 29.43. It's made a peak D. I'm not sure what it's trading at, 29.65. So I think it might almost be making a leg E if it goes above 29.70. Most importantly, there's this pattern that this is what my subscribers get every day, a long pre-see on what we're doing and why we're doing it. Look, that DOG is moving it's in a buy mode at 90% in the daily stochastic, and the MACD is still strong. It is ready for a little bit of a consolidation. That's fine. But it looks to me like the target of 30.36 will be achieved within a week. That's my thinking. Might be a little longer. This is the 120-minute chart of the DOG. It's just about to bump into I put that cup formation. You remember what we were looking at before in the gold contract? That cup formation. Yes, that cup formation at the top. So this is what I give. Then I go on. I don't even know what this chart is. This chart here. Oh, that's the E-mini. Every day I give the E-mini with the parameters, what to look for, and discuss it. Not a trade. I just give all the parameters and where it is in the Chapman wave. Here is the 120-minute Dow Diamonds. There's that V-shaped pattern, the declining wedge, which always gives you a bounce. The bounce turned out to be the H pattern we were expecting. The left side low was taken out at 148.50. It went to 147.50. Now there's another bounce with a potential H pattern. We don't know yet. The day is young. Anything can happen the last day of the month and week because there are fund managers doing all sorts of things. But every one of these patterns we were looking at, that's very important. What is this one here? No, it's not there. Oh, here's my overview. Very comprehensive overview. 120-minute chart of the Dow, where we're looking at the down channel in this particular case. We're looking at an up channel in the VIX with a cup formation at the bottom and an arch. And this oval, the two together, like a mirror image, make an oval pattern. It says that we're getting close to a point where they should kiss, they won't really kiss, but where there should be a pretty decent bounce. That bounce should have been today. So far it isn't. Here's the trend index. I used something called the Chapman wave trend gauge. There are no signals right there. It was a perfect signal 3 days ago. Here's the arch formation. This is left side, right side, price time support. Here's the S&P plus everything we're looking at. Okay, let me go to this one here. There's the Dow chart that I show with the technicals, the explanation, what we're looking at, why we went short right there. We went short the S&P right at the opening on the 3rd of August, right within a point or so of its all-time high, and that's a 300% short. And we are still in that position waiting to see how that 9-period moving average is going to be hit or if there's going to be a bounce lower. So, and the stochastic is at 7% in the Dow. I mean, that's just showing no strength whatsoever. And then, of course, there is my opening call, my trader's corner, and that has all the details, about 18 bullet points every day. And the right at the top, if you don't have any time for that, I give a summation right at the top, one paragraph of what we're looking at. So let's get rid of this, and I'm going to go back to the Dow. So what I'm looking at in terms of the Dow, that's the wrong one I got rid of. If you don't mind, I'm just going to get right back in there. Hope the charts are showing. Oh, Mike is back. Okay. Mike, you're there.
Yes, I am, Basil.
Good. I stalled a little bit while I was waiting for your question. Yes.
Okay. Basil, I'm trying to catch up on what you've been talking about. Anyway, do you think that we have possibly made our peak in the socioeconomic top that you've been talking about? And do you think that the peak that we made in the Dow, the 15,658 on August 2nd, might be a top that may be around for quite some time?
Okay, so your question really is that in my overview, as I just discussed it, I think another icon of excessivity is this pattern that we were looking at for the Rio Solar City, although it actually has a great function, so it's more functional than purely cosmetic. Have we made a top of significance back on August the 2nd? And my answer is absolutely not. And I'll explain why I don't believe it's the top. And if it's a major top, we will see a much higher price before then. I'll be back with Mike and Bob straight after this.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.6% profit to an incredible 48% profit in just one equity. And all 6 of those winning trades had been initiated no earlier than just the previous month. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began, and right now you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber, as this volatile gold market provides trading opportunities after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial to the Gold Report today by visiting TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Learn about good health and fitness. Living a primal lifestyle with Nico and Paige. Next on TFNN.
Folks, don't forget, Nico and Paige coming up, just a primal lifestyle, just a wonderful way, a listen and educational aspect of your health and what you can do. Just a great show coming up. We have fabulous shows all the way through until 6 o'clock tonight. So let's just do this. What I'm looking at here, we have Mike in Ormond Beach. And hi, Mike.
Hey.
So let me just do this. I want to show this chart right now because I was discussing it before. I love to do things in real time. The naked chart that I'm showing here of the gold contract, 10 minutes, I said will go to a higher high. It has just gone to that leg C. So I just wanted to follow through just so that we've got some kind of clarity here. So the Dow itself, 2 things. I'm answering you. It was a little glib because we were running into the break, but I wanted to get out exactly what my thinking is. My thinking is that there's a leg D in the Dow. I'm going to be showing my subscribers on Tuesday when they get back the charts that I've been spending a great deal of time working on for years and years and years. The monthly charts of the different the S&P and the Dow, and what it really consists of. And there's one aspect of the monthly chart that is absolutely important, and that is what happens after a quick peak C to D or D to E. And in the long term, I'm going to just pull, this is not the chart that I wanted to show. I seem to have missed it right now. I think this is something else. Let me just pick this one up here. Oh, where did it go? Oh, here it is. So this was the black background. That shows exactly where we are on the S&P. We are bumping into the resistance line that has been a repellent in leg D. And other times at major tops, we've gone in 2000 March, we went to 50.52 at peak D, plunged down to 768. The next one in October of 2007 was peak E, went to D and then a quick C, a quick D and a quick E, then went to 1576 and then plunged down to 666. Now we've gone in the second buy mode to a D. I suspect we're going to at least an E and then an F. So this is just going to be a timeout, a very necessary timeout. There are very many parameters that we can look at right now. I think 1609 to 1598 is pretty much, that's going to be a really important support level. So I hope that answers your question. And if you don't mind, I do want to go to Bob next, but I'm going to do this on Tuesday when we get back, Tuesday and Wednesday. I'll have the close today, and I'm going to spend a lot more time on the monthly, and I'll answer your question over the next week, and I'll explain why, if you don't mind.
No, that's fine, Basil. I'll listen to the archives, and you and all the TFNN listeners have a great holiday weekend.
And same to you. Thanks so much for calling. Love to hear from you. Let's go to Mike in Ormond. We're at Mike. Bob in Lumsden, New Jersey. Hi, Bob. How are you?
Good morning, Basil. Always a pleasure to speak to you. Just a quick question on the VIX.
Yes.
I have it in leg D.
Absolutely.
Do you think we're close to topping out in the VIX very short time?
Now, this is going to be, that's a fantastic question. Let me just explain this. I'm in leg F/B in the 120-minute chart, but the technicals are still very strong. That's number one. Number two, on the daily chart, it's in leg D. In the weekly chart, this is going to be the strongest close we've seen on a weekly basis since back in June of this year, and that led to one more month of the spike to 2191. Because I've seen so many round numbers at the tops, I just spoke about whatever it was. Oh, Herbalife. Look at Tesla. Tesla made a round number high. I can just go through. I don't know how many charts, and I can go through I wanted to do it today. I haven't had time to go through how many different charts have spiked up to leg D and E in their daily charts with doji tops or silent doji tops or round numbers. So the answer to your question is, I think the VIX is making higher highs and higher lows. That says, yes, we are close to some kind of a reflex rally. It could happen early next week. But as long as the VIX stays in the high teens and then goes to the 20s, this market is going down. So I'll follow it up more on Tuesday. But that's a great call. Hope I answered some of your questions. Thanks, Bob. Have a great weekend, everyone.
And peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.